As our viewers know so very well, we've been talking on this program so much about the SPAC frenzy. I decided that I would ask Vlad about SPACs in particular and whether he thinks people understand the various incentives and, I would argue, misalignments that exist in that type of structure.
Retail investors as a category is a very broad category. It obviously encompasses a wide range of different people of various sort of strategies and sophistications. And without a doubt, we're seeing investing become more relevant for everyday people. And we're seeing retail investors become a larger and more significant force in the markets. So that's and we think categorically that's a good thing. The U.S. stock market has been one of the biggest engines of wealth creation in history. And, we're facing real problems in society with wealth inequality. A big part of that has been that the wealthy and institutions have had access to the stock market and others have not. So I think most people would agree that having people investing earlier and investing frequently and making it habitual is a positive thing. And that's something that we'd like to encourage.
Vlad, I'll tell you the thing that concerns me. The thing that concerns me is there will be a day when the market will go down, and then there will be finger pointing. And the question is, are the investors going to stand up and say, we were so smart, we knew everything, and we just made a terrible mistake? That's not usually what happens. In truth, what happens is they say that either the big bad Wall Street or the big bad somebody did something to me. This was a predatory act. And when you look at SPACs, for example, or so many of the companies that are going public, there's a reason they're selling into this market and not remaining private. You either have to believe that some of the smartest private investors in the world have been dumb and have been terribly undervaluing their own companies, or the retail investors are smarter than them. Who do you think is smarter?
I think throughout history, there's been always, regardless of the market conditions, people saying that markets are overvalued. People are saying markets are undervalued. And that's sort of the ebb and flow of things. And things also have changed very rapidly throughout 2020. I mean, who would have thought in March of 2020 that we would see a V-shaped recovery like ended up happening? I mean, some people certainly were hypothesizing that at the time, but there were others who were saying that's ridiculous and that's wishful thinking. And I think that continues to this day. There's people with lots of opinions out there. And that's why we have to focus on the inputs of the business that we can control, including the reliability of the service, the customer support, and making sure that we're improving that, and staying close to our customers and making sure that we help them on their journey and offer them more and more products that help them on their journey, ranging from our spending and savings products all the way through to the variety of investing products that we have.
Shepard Smith here. Thanks for watching CNBC on YouTube.